All right. Hey, everyone. I'm here with Matthew Silverstein from Wealth Factory. Thanks for being here, Matt.
Thanks for having me, John.
I've wanted to talk to you for a while about uh, Wealth Factory. You've been coming to FMS for a couple of years, right? And you have a different type of business than most folks in FinPub. And so your product model, your audience is a little bit different. So would you kind of lay that out for folks and kind of explain what Wealth Factory is?
Yeah, so Wealth Factory, we do personal finance for entrepreneurs. We help small business owners, entrepreneurs, keep more of the money that they make. And that's through tax strategy, asset protection, estate planning, insurance coverage, and cash flow optimization, and a little bit touching on investments as well. Um, what we tend to do speaks to people who are active earners in their earning years, the working wealthy, so to speak. And their lives change, the situations get more complicated, they get less complicated, they get married, they get divorced, they build businesses, they sell businesses. And we want to be here through that entire process as critical questions come up that if only they had known some strategy sooner, they may have been able to save a boatload on taxes or been able
Hmm.
to structure corporate structure differently to make life easier. And along the way, teach them how to find opportunities to build their wealth, both through their business and through other opportunities that are aligned with their strengths. So that's the core of it. And it's one thing that I think makes the demographic of our business a little bit different from traditional FinPub in terms of if traditional FinPub skews um, older, high net worth, looking for what to do in terms of getting an edge in the market and in investing. We're looking at people that are actively growing, starting, or maybe even at the other end, winding down, but like in their business. And so that's their greatest leverage point that they have that we can help them with. And I think everything comes out of that because for a lot of entrepreneurs and small business owners, what they make in their business, there's a function of like that's what how much of that can flow down to them personally so they can build the life that they want to live.
Right, right. And that's to me that's very interesting because like how would you so you have the work love that phrase. It's a great copy phrase, the working wealthy, like that's fantastic. And the idea of selling to entrepreneurs and business owners, what types, if you wouldn't mind, like is it digital entrepreneurs? Is it like the doctors and dentists? Is it kind of all of those folks? Is it the kind of the restaurant owner? Like where do you see kind of that customer?
Great question. So when we first started, our customers were a function of our network and circles that we were in. I was fortunate
Hmm.
to start the business. One of my co-founders was a New York Times best-selling author, Garrick Gunderson, and he's a dynamic individual who connects great with people. And his circles where he was speaking on stages and being invited on webinars for in the chiropractic community, for dentists, for a lot of people in medical professions and things like that. So in the beginning, yeah, our customers were often condensed into a couple of different industries with specific needs.
Hmm.
Um, Fast forward 10 plus years, and we're diversified across everything you can imagine. And that's because we had a friendly little competition, Garrett and I, in the beginning of like, okay, can we build an engine to scale paid traffic to beat the pants off of anything that we're able to do on a one-on-one or even a one-to-many standpoint? And so that
Hmm.
went from $0 a day in ad spend to $5 to $4,500 a day on average in ad spend. We peaked at one point at 13,000 and came back down because it was pushing the gas a little too hard for a small business like ours from a logistics standpoint. It's funny to
Hmm.
reach a too many customers moment, but it happens. Um, yeah, so that means e-com, restaurateurs, real estate professionals, people that are high earner W-2s who have a side hustle or are starting a side hustle. And that's an interesting trend that I've seen reflected directly in our business over the past few years is that the number of new business starts every year keeps going up. And so the number of people that identify, whether because of how they're interacting with social media or what they're seeing, that identify as an entrepreneur or wanting to be one, but have a skill set to start with it's opened up the doors beyond just a traditional small business owner for us to a much larger TAM,
Mhm.
which seems to continue to grow.
That's awesome. I think so. For me, coming at it from the FinPub perspective, a couple of things stick out really strongly. One is that the kind of the working entrepreneur, the to me has always been the best tier of customers at FinPub. And that includes the doctors and the dentists and the chiropractors, the people who have their own kind of shop and professional setup. Those have always been kind of the top tier. I think the best description of it is a little bit more was Richard Stanton Jones. He was a copywriter back in the 80s and 90s. He called it the best customer. He called him the millionaire pig farmer, which he meant like kind of the blue collar business success. And I think that we found over the years that the doctors and the dentists and stuff are a huge segment. And so in a business environment where people are thinking about acquisition of on the higher price point, like the traditional front end back end model was always you're going to use the front end product to go out and identify a paying customer, subsidize the cost of the media, and then and the point of that was that you would find a segment of customers that some percentage of would buy your back end products, and the goal would be like you're really using that as a filter to find those high end buyers. What I always love about what I've seen from you is that you're just getting that high end customer. I mean, I know you have a front end product and stuff, but like your customer is fundamentally that high end customer, right? It's like you're functioning, it seems almost, it's like a B2C kind of operation, but it's really a B2B, right? You straddle that line so beautifully. And that to me is like a really fascinating business from a lot of perspectives. Is that kind of how you see it too?
That's exactly how I see it. I think about it from B2C customer acquisition strategies. B2C typically have a lower lifetime value,
Mm-hmm,
uh, but the customer acquisition cost can be lower than going B2B, where you might have traditionally different tactics, cold
mm-hmm,
email, LinkedIn, longer sales cycles, opportunities for enterprise deals. So in our business, I look at where are the design constraints.
mm-hmm,
If, a couple of years into the business, Garrett asked me, my co-founder asked me, knowing what you know now, Matt, what would you do differently with Wealth Factory? And I said, I would never again start a business that didn't either have the opportunity for enterprise level deals, enterprise sales, or recurring revenue. It's got to have one of those for me to be able to sleep well at night and know the business I'm growing is going to be like a foundational business. Um, so we decided to go MRR. I could tell that story later on, but essentially the front end B2C model, books, low end tripwire, accessible price point products. And it does bring in a wide array of entrepreneurs and people that are interested in building their wealth, but it immediately goes into our core services that are for that ideal business owner. So to your point, if I were to go out and market our back end program, our high ticket program, um, it's going to be pretty tough for me to
mm-hmm,
go out there with ads, webinars, everything. If it's just like traffic to consultation funnel, um, because there's a big, hairy commitment there of something. Our services are very valuable to our clients, but they're
mm-hmm.
still kind of big picture and amorphous. We're talking about, oh, we're going to help you with tax and estate planning and insurance coverage and cash flow
Right.
optimization. It's like, how do I make a decision on that? It's
Yeah.
way easier for people to get past a fear of there's this, you bleep me out if you want, but I was listening
No,
to
no.
a podcast with April Dunford from Obviously Awesome, one of the best business marketing books I've read in a long time. She was interviewing someone and he said that in B2B sales, people think that it's the fear of missing out that they need to ratchet up to get people off the line and convert them into a back-end program. And really what we see in environments like this, it's the fear of fucking up, FOFU. And I think when we try to sell, we try to do it all the time. We keep going back and we try to sell um, ideal customer. Here's our back end program. Here's our program wealth architecture that you're going to love and get a lot of value of. We'll do risk
Mm-hmm.
reversal and everything. But it's a big decision to make if you haven't made any decisions with us before.
Right.
You eliminate a lot of fear of fucking up if you just spend a couple of dollars on one of our books. If you enjoy it, we have after people buy, they can self-schedule with us on the thank you page after
Mhm.
some upsells and downsells and things like that. And so what we find is we can run ad spend on Meta, YouTube. Someone that's never heard of us before clicks on an ad, buys a book, self-schedules on the thank you page, and 2 days later spends $8,750 and then $475 a month. Now, it doesn't
Wow.
happen every single day, but that path does happen. And I tried it the other way a lot of times. It doesn't work the same way with the same efficiency.
I'm sure. I'm
At the
sure.
front end, you at least still get 40 to 50% ROAS, return on ad spend, on a zero cost of goods sold type of product on day zero. It still helps us have the confidence to be able to keep investing in that engine.
Mhm. Yeah, no, that makes perfect sense. And I think that yeah, I'm not one that's like, oh, everyone should get rid of their front end. I know that's a big thing that's happening market wise right now, and I know there's people who are using various high price funnels on the front end, but I think that yeah, there's a lot of there's a reason that it developed that's more than just the the fact that it was hard to sell on the front end, you know, higher price points, right? Like you have
Totally.
much broader pool of customers. You have more people that you're not going to catch maybe in the other one. And like you said, like there is, especially when going to a price point like that, there's some comfort that has to come with the relationship sometimes. And you might be getting a percentage in a hard phone floor kind of model, but like there's more people you would get if you kind of have both, I think,
That's a
working.
really good point. I think that does come down to trust building and also whether you are the world's best copywriter. I mean, I'm not going to compare myself to Porter. He's on an entirely different level, so he can pull that off, right? I
Right.
can't, but we still have to build trust in our marketplace and
Hmm.
make this something that someone who's never even thought about our business before might go, I like these guys. They resonate with me philosophically. I don't feel like I'm going to be signing up for a ton of work for something that's going to make my head spin. And
Hmm.
we have to be able to show that through different mediums on our
Right.
end,
So
our business at least.
yeah, especially with so like I mean, in my head, and you correct me if I'm wrong, it seems like kind of the product mix is like this combination of kind of what you would get from um a really good CPA and somebody who really is almost like a business operations or cash flow mentor, like someone kind of this mixture of like there's tax strategies, there's things that you need to do with the money that you're making, kind of systems. And so you have like the I love that FOFU idea because that is such an easy like whenever you have a situation like that, like the fear of fucking up is um, almost bigger than the fear of missing out for entrepreneurs in a lot of ways. And so you have that kind of product mix that's really interesting. Um, and then, but it's not as like you said, it's not as clear cut as like here invest in these three stocks because this is what's going to happen kind of approach that a lot of people obviously on the FinPub side, the newsletter side, stock newsletter side are there. It's almost like there's a certain kinship with the trader education side because there is this education piece of like how to be better at the kind of mechanics of running the business, right?
Yeah, yeah, very much so.
Yeah. Now, let me do this first before I go to this one. Um, do you write your own copy? You kind of alluded to that, right? Are you the primary copywriter?
I am not.
Okay.
My one of my partners I started the business with, Tom Bernthal, I have a couple of in-house copywriters.
Hmm.
Tom and Steven and I have been working together, gosh, since 2011 in the same businesses. And we just
Oh, cool.
together for that long. So Tom has been the voice of the business. And then um, Garrett was the spokesperson of the business who was able to connect with people and land that messaging. We had a
Hmm.
really great working relationship with our internal team. So because we've been doing this so long and my team of copywriters, we're entrepreneurs, they're entrepreneurs, they just have a really great knack for speaking to our customer and knowing what they need. So
Hmm.
I won't take credit for the actual copywriting piece. I couldn't hold a candle to their skill set.
That's awesome. That's awesome. It's great to have a team. How did you uh let me ask you the thing first. because of the customer you have you done affiliate work with other people in the kind of the newsletter space and the trader education space? Have you done any kind of like swaps or things that you tested out trying to see if each other's traffics in lists have good crossover?
Embarrassing moment to say, no, I haven't done any affiliate work with folks in the trader education space. One thing I'm doing, I love Michael McDougall, who I met through you and FMS. And
That's
so
awesome.
we've been working together to do some paid traffic stuff with some trader audiences to see if there is a there. And in our initial testing, what we were finding, at least through his systems, is that the conversion rate was off the charts compared to what we were able to get on Meta. Haven't dialed in the ROAS side of that yet, but I think there is definitely something there, and it's going to come from some more massaging of the messaging, which I
Hmm.
haven't nailed yet, and we'll be able to
Right.
get there through testing.
Oh, that's interesting though. So there is definitely some, but there's definitely enough like smoke to make you think there's some fire there.
Yeah, yeah, absolutely,
That's
absolutely.
great. I love working with like Mike's great because he gets so hands-on like with you guys and helping people figure out like how do we make this thing work rather than,
Yeah.
um,
Interesting on the flip side, thinking about it from okay, our audience, like our existing audience, and would they value some of the insights that people in FinPub could bring to the table? Wow. We had Matt Warder on, and he did a webinar, like lucky to snag him right when he was getting off an airplane. And but he was able to just drop some value, some knowledge to our audience. They're like, none of them had ever heard us talk about coal before, commodities, but we have some research on some of it. But people, it provided a perspective that they had never seen before, which was
mhm,
an interesting model for them to think about how to navigate the world as an entrepreneur. I think even just thinking about not what is my next trade I'm going to make, but I think the interview you did with him a couple of years ago, where he
mhm.
showed that quadrant and his predictions of quarter by quarter or year by year, what we think is going to happen and what's going to sell. That's actually really helpful for entrepreneurs to know where the puck might be going to be able to prepare and plan for that. Now, granted, as
Yeah.
entrepreneurs, we oftentimes we're way too busy putting out fires in our existing business and focusing on like
Hmm.
what needs to happen this month. Um, but to have that sense of where things could head really helps with planning purposes. And I think people really valued that.
Hmm.
And so I think that there's a lot of wisdom that could be unlocked by that kind of direction and collaboration too.
Yeah, yeah. I think that's why like there's an interesting and Matt's brilliant because he does have such a great macro presentation of things. And I feel like there's this classical aspect of FinPub on the macro side, which was like I'm going to interpret the world for you. I'm going to show you how this works. And when you have somebody who's really good at that, it is kind of like a, you know, revelatory moment. Um, and so like yeah, I think that would be really interesting to me to see how that develops for you guys if you start to add product like that or do affiliate relationships or things um on the back that might be valuable. What's your product mix look like then? So like I know you have the very high price, but it seems like you have a few different product types. So what are those basic types like kind of from the deliverable perspective?
Sure. So if I were to just split them into front end and back end, let's say on the front end, books, courses, and a mastermind type membership where we meet on Zoom once a month with entrepreneurs and very unstructured. You can come in and out, $197 a month. I
Hmm.
have around 1,000 members in that program right now. We call that Wealth Builders Club. And that is that would be our largest membership type program of active subscribers.
Hmm.
On our back end, Wealth Architecture is our program where you could think about that as what we've always been like our big vision of what we're creating is something very interconnected for entrepreneurs that resembles
Hmm.
almost like a virtual family office without the price tag. So you
Okay.
have a financial quarterback who helps assemble any missing pieces of your financial team that you might not have. I saw, um, anyway, sorry, moving on from that piece. You could call that a coaching program. You could call that a consulting program, but essentially you have that quarterback who's going to help parachute in other experts, CPAs, attorneys, anything like that that you might need in your plan. And that's our program. That's the higher ticket, 8750, 475 a month. Used to be a program that we had that was just one-time price point, 25,000. That was our higher tier, but worked really well with an in-person event model that we knocked it out of the park on every time. But COVID hit, we had been doing this, and we were able to transition really beautifully into this model.
Okay, cool. I was actually going to ask you about, did you have an in-person model? And so you've replaced that in-person model with this entirely then?
Yes, entirely. We haven't done in person in a long time. I miss it, and it was a lot of fun, a lot of work. And I actually, from a structural standpoint, love the focus that our organization is able to have. And like, the sales team can sell one product and not, when you have an in-person model, it's beautiful, but you end up with this weird inefficiency of, okay, sell the event first, which people either want to go to or don't, and either can make the date or can't make the date.
Right.
And then you have your ideal customer with a waiting period built in from now until the event. So the velocity is stilted in a way, at least when you're ramping up. Once you have a pipeline, it's fine.
Yeah, but still it is an issue. I know, like, that's a great way to frame it. Where, like, especially if like you're able to sell the product without that event piece as well, the price points, then why have that interstitial event product between those things, right? Like, I love events for different reasons, not just because of the business side, but like I'm an event guy. But I also recognize that there's a limiting factor on the event product, right? Just like you said.
Sure, but here's a differentiation of why yours makes all the sense in the world. And the one I was talking about, the workshop, the one-off workshops were great, but aren't in the current model. I would like to bring them back when we have capacity to do so. But your event is a community event, and
Right.
that's a kind of event that would entirely be a no-brainer, make sense for us. Like, once a year, all of our clients, members, people in the community come. I mean, this is such a great business model. You can have event sponsorships that can outweigh anything. Great renewal opportunity. These events, the workshops, were very more top of funnel ish. And so that was like, why are we creating a choke point on people coming in and getting value from us? Right.
Right. Yeah. Not a great front end kind of off. Yeah. No, that's definitely true. I have a colleague that I spoke to who does like 30 events a year, and was telling me that they do a massive event that is free once a year, and it costs them like $1.5 million by the time they're done with it. But it's like, that's their marketing, is they just pull everybody into that, and then from there they split them into the other events and get people in and do stuff. And I was like, it's a really cool model, very big upfront expense, but it's a pure event model, right? Like, it's not this mix. And so anyway, the like, how do you see, so now that you've built your very unique structured business, right? And now you see all the stuff from the kind of the newsletter model. And I would say, like, a lot of that is like, there's the Agora model, which has been kind of duplicated out into lots of different businesses in the community. We've seen kind of the trader education model, which is different. And there are some sub models, but where do you see, like, from your perspective, what has been the most interesting kind of pieces that have been useful to you and your view of your business, versus things that maybe like, yeah, I see a lot of people do this, but this doesn't seem like it makes sense from us? Like, where do you see those kind of, I guess, that outline of similarities and beneficial things, and areas where maybe this isn't quite the same model?
Sure. So, speaking as a only sort of outsider, my own perspective may be skewed or not even accurate all the way here. So the question being, how do I see what is working? Can we go over that again? How do I see?
So basically, like, so you think about the Agora model, right? You have, like, traditionally that you have a set of front end newsletters for a single guru. You are going to go up into price into multiple kind of back ends. And then you would have another guru who would have the same kind of product ladder. And so it's front end free newsletter, front end newsletter, multiple back end products. And that guy kind of forms a mini franchise, and if he's big enough, he's his own franchise. But if he's not big enough, then you add other people to him who have a similar model, right? So you end up with a multi-guru kind of publishing brand. And then you have and there's different ways that the product ladder is built. A lot of times it's built on a risk profile. So the front end products are basically, these are the basic blue chip stocks around this idea, the simple things you should do. And then the back end services are the higher risk. Maybe they're small caps, maybe it's a trading strategy, right? And then, so you're selling like this risk profile almost on the back end. And then on the trader education side, the product ascension kind of goes with proximity to the guru, right? Here's a low price product that like, here's kind of how I do it. Let me train you to do it. It's a higher price product. Here's a service where maybe I'll have a trading service and you can follow me. And then the highest product is some form of a coaching program where it's proximity to the guru is kind of the thing, right? Like we get on a live webinar or things like that. So I think of it as kind of like, those are the two basic vectors of product development with a lot of variation in between. And like I said before, I think yours fits to me, not exactly, but more in line with that proximity side. But it doesn't seem to me like, and maybe this is because you bought out your partner, and that you're like, how do you think of that product development? I guess is what I'm saying, on your side versus what you see on some of these other models.
Gotcha. So in terms of product development, we think about what is the max value that we are able to provide to an entrepreneur through our collective knowledge, strategies, the problems that entrepreneurs face.
Mm-hmm.
And my team chunks as many of those out as possible into how do we productize knowledge. So there's this snake eating the tail kind of scenario where I think that in order for us to grow, it's taking value from the biggest stuff that we can do and try to condense them into discrete pieces that we can productize. So can we productize information and knowledge and strategy? And then once we've productized it, can we automate components of it, whether through code or other kinds of automation, or a great user experience in the form of calculators, generative tools that we're working on. So I'll give a brief aside on that. I just built an AI tool. So in estate planning, one thing that people like to do is a statement of purpose. Think of that, I'm butchering it, but think of it as if you're watching this video, I'm dead now, and here great-grandchildren is what I'd like you to know and what's important to me.
Right.
And I've conveyed in my estate plan and the rules and everything like that. So you could start with a blank sheet or a worksheet and fill that out, or I just built a tool where you can answer a handful of questions and it gets processed and fed through a number of training examples of what a good statement of purpose could look like. And it spits out a full document for you. So we look at where are there places that for a busy business owner, we can either create value that they can't create themselves, or we can condense the amount of time. So that's the example of a tool that we might put in to one of our products to productize something that maybe they would spend hours writing on their end, or even an hour talking with their estate planning attorney and get billed in part in that conversation. If we can take that down to a zero cost, that's value that we can move on to our customer. So my team, in terms of productization, when we launched the business, we had, let's say, 2 products: our back-end program, $25,000 one-time price point, and a workshop that you could come in person to. Then we create our first newsletter for the front end. Then we go, okay, well, what else doesn't get captured in that newsletter or isn't the right kind of medium, and we should have video, and we should dive deeper into a particular topic. And so in the early days, that was just launch course, and then another course, and another course, and another course. The courses started to become more interactive with tools. We started to publish books because my co-founder was a great author. And I teamed up with Andrew James, has a firm called Cerebro, and this is someone I've worked with for a long time, but he really helped us figure out how to market books and use book funnels. And that became a big driver for the front end for our business. And that catapulted Garrett, because the millions of dollars we spent in ad spend, where I mean, that's great for him in terms of his face, in terms of his recognition. Now he
Right.
goes everywhere and people are like, oh, you, and not that he wasn't successful before that. But that really worked in that model. Now he was our
Mm,
only guru and an owner of the business. So it was not a risk factor. I know for a lot of guru models, it can be.
mhm,
I think there is a model there for Wealth Factory that makes sense to have more multiple multiple gurus. So I would take that from the Agora model and install that into Wealth Factory if we had the chops to figure out like the best way to do that. But that's still kind of new to us. So anyway, long story short, you could say that my team has built 20 plus products on the front end. And
wow.
we don't advertise all of those on paid traffic at the top of the funnel.
Mhm,
Probably only advertise two, maybe three of them usually at any one time. I remember sitting down with Ryan Dice at our office in Austin before Wealth Factory, and he said to me in our previous business, you guys don't have an offer, you have a product. Or sorry, you don't have a business, you have an offer. We were like, oh no. And we had a great business, but it was like one product. So it was like never going to do that again, learning from that piece of advice. So we
mhm,
created multiple products, but he said at any given point, you're really going to only have one that's knocking it out of the park on paid traffic. And so it does look like that. However, people come in, and if they're not ready to join Wealth Builders Club or Wealth Architecture, my team will promote our own products to our list at least a couple times a month, the different products. So that's where the
mhm,
content calendar comes in. So we could have a tax cut package where we give all of our tax strategies, and you get a 3-year tax review with a CPA if you submit your tax returns for them to look at and find some missed opportunities, or an access capital and credit program where we teach entrepreneurs. You would There are certain levels that everybody's in. Some people already know X, Y, and Z. Other people haven't taken the time to go through it. So we have entrepreneurs that come to us and they're successful, but their credit score is all beaten up, and they have inefficient loan structures, and their cash
mhm,
flow sucks because they're paying down loans in the wrong order. So we have programs just to simplify that and make that easy.
huh,
And every time rates go up or down, it's obviously a great time to promote that program. So different hooks of things that happen throughout the year tend to match up well with different products that we have that match seasonality for entrepreneurs, or just different things that happen in the economy. All of those then lead to front end product, then lead to, do you want to join us in Wealth Builders Club for our mastermind?
huh,
That's our $197 a month. Typically, we'll have a bribe to join in there, like get the full thing for free when you join Wealth Builders Club.
right.
Self-schedule on the next page for, hey, if you really want to fast track the results, Wealth Architecture program, schedule on Calendly here and talk with our team. So that's how we think about productizing into discrete components that make it easy for people to go, yeah, this one thing is really bugging me right now. I'm going to click and I'm going to check this out, and I'll drop
Mhm,
$97 and spend some time on it. It's low risk, um, low time commitment. And yeah, you know what? I think I do want to bite off some of the other more holistic pieces too now.
right. Oh, that's really cool though, because I think like the idea of using like the same kind of economic events that you would use to sell an investing product and using them in the marketing from basically the other side, right? Like for the entrepreneur, is a really cool. Like I never thought that would be something that you would do, which makes sense when you say it. And so that's really interesting piece in the marketing side that you would do that where you're framing things for those guys. And I think that one of the things that I have a few firm beliefs about the changing state of FinPub, and one of them is that building very unique brands around specific customer segments, whether they are traditional customer segments or new, like ancillary customer segments, is one of the ways to win going forward. And I feel like you guys have done that really well already. And so like the the copy piece is interesting to me because you have a stable set of things that are more like you said, they're more about my experience as an entrepreneur, my ability to run my business more efficiently, do better things. And then you also have this um, event driven, kind of market driven set of copy approaches that give you that kind of like urgency and newsiness of what we would think of as being a more normal like newsletter type, stock newsletter type promotional model. And so that gives you like this really interesting mix of acquisition opportunities then, because like you said, you 20 front end offers so far. Like that's,
Somewhere around there. I think we just counted it up yesterday and it was around that.
yeah, that's pretty cool. So like, do you know what kind of mix of stable versus like newsy products you've done there? That's just random.
Yeah, a minority, very much a minority of them would be. So let's think about some of the more. Let me just think out loud for a moment of some of the more one-off programs that we did. We created a program back when DeFi was hot and spending a lot of time in it, and it was crazy. And I was like, I can't believe that this works so well. But so I created a program, Cash Flow Crypto, and it was, we looked at various things that weren't in the buy and hold, but not trading. So where could you find yields and things like that? And so that had a shorter lifespan, but was obviously crypto offers are doing very well right now. But that
Right.
specific one that fit our cash flow ethos was, I guess you could call that a moment in time, at least until something changes there. The other one-offs we've done, a financial trends summit that we turned into a financial trends product. And that's like, what are the big things that are happening and coming up over the next few months? Now, if I was smarter about it, I'd do over the next 10 years. It's just like Diamandis style, singularity style. I just don't know on the front end, like how many people I can get thinking on 10-year time horizons,
Yeah,
even
that's
if that's a
hard.
healthy way to think about things. That's
Right.
tough. So a minority of them, I'd call it sub 5 or 6 out of those 20 that were more specific. Now our copy to sell an evergreen type of product, we'll try to make that as relevant to now as possible, because new and relevant is always going to beat evergreen. With the
But that's
exception, go ahead.
no, but that's what I think is so cool about this is that so there is like the non-newsy kind of trendy stuff. When you have that working, that's kind of like your stable workhorse, right? Like you can always get something there because you know it's about an ongoing kind of personal issue I have with the business or whatever. Um, and so you always have that no matter what the news cycle is doing. But then you can capitalize on the upside of attention with kind of news trend-based stuff, right? Which is the beauty of having those kind of things is that you can get, hey, there's a lot of attention on this, like it's crypto. We can bring in a lot more customers than normal right now, but it has a short period of time. We also know that like only having things that are like market driven or news driven means that some publishing groups and even the best ones might go a year or two without a really effective front end acquisition product, and that sucks, right? Like it
Yeah.
sucks. And so
Yeah.
having things that are stable, that are evergreen as well to kind of fill in those gaps is like it's a really nice mix, I think, as a business owner to have in your marketing.
It's I wanted to build it this way because I want to say lessons learned from or scars from the early days where we had no recurring revenue, event model, high ticket, and we launched the business, did a few $100K on the launch. But like my team, we pulled like 2 all-nighters in a row. I was like, come on, guys, it's going to be 5 a.m. The coffee shop at the taco shop in Austin. It's going to open. I'm going to make it there. I'm going to bring back a vat of coffee and a bunch of breakfast tacos. Stay awake. And so we did that. We launched, went well. And then the next month hits and we got to do it all over. Not the launch part, but how do we go start at 0 every month? Is something that I went, that doesn't need to happen in this world anymore. Now,
Right.
Or at least it doesn't if you can think about it in a different way. And a mentor of mine had always been beating into my head, subscription revenue, subscription revenue, subscription revenue. And so I was thinking, how do we do that in a stable way? So when we had that conversation that I referenced earlier of like my business either has to be able to win enterprise level deals or recurring revenue. We went recurring revenue. So we took that 25,000, lobbed it down to 12,500 up front and $2,000 a month. That was the first recurring revenue piece that we made. I knew going into it, we knew what kind of cash flow crunch that would create for us. But we went through it anyway. And I'm sitting there living in LA at the time and going, I am now making less money than I made in my first sales job out of college. And I know what I'm doing, but gosh, this is hard. What if I made the wrong decision? Right. But it started to like a
You're
lot.
fucking up again.
Yeah, I know a lot of brilliant marketers and business owners that are like way, way, way more successful than me. And they say, I would never sell a recurring revenue product because I can sell 10x the amount if it's a one-off, because it's so hard to sell a subscription. And I agree with that. I just didn't want to, I don't think I'm such a good marketer that I'm going to be able to make it work 12 out of 12 months, year over year, starting from zero every time. Because you know what else is a recurring thing? Expenses, rent, overhead, payroll. I want to be able to hit all those things. We've never missed them, but but you don't want to be sweating it out. So we made that decision, and eventually the recurring revenue, it continued to stack and stack and stack until I think it was last year, we hit like 423,000 in recurring revenue, monthly recurring revenue from subscription revenue, and that accounted for somewhere around half of our monthly revenue. But it just means that we go into every month and we know what we can invest back into growth. We know what we can invest into things. And while we have not by any means grown as big or even as quickly as many of the folks in FinPub, our contractions have been, it's just been a little more stable, right? Even if things slow down materially and we drop off 30%, like it doesn't break the entire thing because we have that flexibility.
And that's so like one, just as a philosophical point, I don't think anybody in FinPub at this point, other than maybe one or two people, believes that people should be growing as fast and as big as they were in the boom, right? Like there's this whole question of right sizing what a franchise actually is, and 150 to $200 million doesn't seem to be anyone's answer anymore, for a bunch of reasons. And two, like the size that you're at is like from a publishing perspective, everybody that I know that is kind of gotten to that size, and there's some range there, is really happy with their business. There's always 1,000 problems, right? But like everyone's always happy there. And then whenever I meet someone or somebody that I know starts to push up above 60 to 70 million, up in that range, they're a lot less happy. Like as people, like they're just a lot less happy because there's so many more problems. And I feel like that's when the lawsuits, employee lawsuits, staffing issues, all kinds of stuff like that starts to happen, let alone regulatory issues. But like, and so like I think that like, that idea of bigger is better is not people's lived experience in most cases.
Yeah, I think there's a bit of a risk containment too by keeping them chunked into smaller businesses too, right? I know I don't want to get like, I'm not looking to like advocate for or get into a debate of like, is Holdco the way to go or is Mega Behemoth the way to go? There are obviously benefits to either of them. And I know we have people in our group that are crushing it and in single business models. And I don't personally have experience like running a Holdco, so I can't speak to that. But yeah, in an environment where there's significantly more risk I think about that as like insurance, estate planning, to have everything in one entity. I'm not saying that the big guys are doing that, but at least in my world, like if risk can be contained into buckets, that's fantastic. So can I even do that in a microcosm in our own $9 million a year business? I think so, because I think that our business could be a $20 million a year business without adding much more complexity to it. I think that there's a get lucky, better offer our way to it. There's not that that's a strategy. Can't strategize my way to winning offer that just completely takes off. That's what we're always in pursuit of. But I don't see in our existing model that we would, other than like ad spend and a few other things, need to like double headcount, for example. And so that's a risk containment piece to me as well. So to your point of the 60 to 70 and the unhappiness, yeah, there are so many more moving parts under one umbrella. And I'm not like, I have no political opinion on like break up a small business, a bigger business. I was talking with my attorney who was talking with a long-term client of his who um, he had a very successful health business, but he also built a very successful fulfillment process, warehouse fulfillment process for his health business. And our mutual attorney said to him, turn that into its own business, break it off into its own entity. He did that, and that became a fulfillment service for all kinds of e-com businesses. And that thing ended up doing hundreds of millions of dollars in revenue, but it's its own
Wow.
business. So it was able to even take off on its own because it was able to specialize
Hmm.
in what it does.
Oh, very cool. That's very interesting. Yeah, I love that. So like you mentioned like mentors and stuff. How have you like let's look at your journey as an entrepreneur. Like how did you get started? And then I'd like you just maybe specifically talk about like your relationship with mentors, if you have one, two, multiple ones, and how that's kind of impacted your growth and in your development in your business.
Yeah, absolutely. So I'll go back for a moment to college. I was at UCLA and I really wanted to work in the advertising department at the school paper.
Hmm.
And I applied and I didn't get the job. I failed miserably. I had no sales skills and I was like jittery and high energy. And like, they're like, how do you sell this pen? And I was like, never done that before. I'm Jewish and had to go sell Christmas wreaths around the neighborhood. But like, that was like growing up during those fundraisers, but like, that was the most that I had done. But I applied a couple more times, and the guy was like, "I'm going to stick my neck out for you because I could tell that you try hard. I think we can get somewhere with that." So cut my teeth in sales, and um, ended. So that was like my first bout of mentorship, where the guy there who ran the advertising department like just spent the time with me because I put the time in and said, "How do we make
Hmm.
this even better?" And I went, "I like that path." My first job out of college, I was working at an startup ad agency. Michael Eisner called it the next Google. It had 100 million in funding and blah blah blah. And I'm doing phone sales, but I loved it. I'm in the middle of like some startup tech thing, and a family member of mine from across the country who I didn't have much of a relationship was in town for a business conference. And I was at the time I was like, I'm going to interview everyone who owns a business and ask, how'd you get into it? What do you like about it? What advice do you have? Because I want to own a business someday, but I don't know what that means other than I took a history of business class at UCLA and loved it, that kind of thing. So it was all theoretical. And he was like, well, I want you to read Rich Dad, Poor Dad and the E-Myth. And at the end of dinner, he's like, how would you like to come work for me in Florida? I said, no, thanks. I don't need to, no, thanks. I've got these stock options and blah, blah, blah. And he was like, well, how long do you think you need to know whether that would work out? I said, give me a month later, I was like, okay, let's do this. I can try anything for a year. So I went out there. He's like, I'm going to pay you less than you were making in college working at the school paper, but I'm going to teach you everything that I know about business. I'm going to send you to the people that I learned from for the stuff that I can't. And that was an incredible experience. That's where I learned marketing. That's where I learned I love technology and became like our tech person, databases, marketing automation. I became like the 300th customer in the early days of HubSpot. I was like inbound marketing.
Wow.
And so just like it was a fun playground. I ended up with this title called like chief R&D officer, but it's because yes, there was nepotism there. That was my in. But it was a long leash and hey, go explore, research, come back, and let's build products. And so we would do that. I'd go out and find something in a different industry. I was really into innovation. So I go to like
Mhm.
Cambridge and into a bookstore and go buy all their books on R&D and innovation and try to go, okay, love this idea. Takeaway, what's an innovation? What's something that's working really well in another industry? Can I bring that to an entirely unrelated industry and create a product or service or deliver value to clients out of it? And that's kind of been, I wasn't even thinking about that going into this meeting. That has kind of been my thing for my entire career. What's
Mhm.
working in another industry? Can we try it and apply it? And is there an unlock there? That's what I love about FinPub. That's what I love about SaaS. When we
Mhm.
moved to recurring revenue, I went, what are the best playbooks for SaaS growth, retention, MRR, reactivation campaigns, trials, all of those things that there are proven playbooks for growth playbooks
Mhm.
in SaaS. Which ones of those can I try and apply in this business that are not necessarily being applied in the personal finance space? And that's how we've built this. I've looked at What works in FinPub? Can I try that here? What works in SaaS? Can I try that? Can I try that here? What's happening in fintech to productize boring, clunky financial services? This is an aside. I think that I'm bullish long term on this idea of embedded finance.
Mm-hmm.
So, can we take embedded finance products like bookkeeping and accounting and what are some other ones that I'm able to bring in and put into our membership site, put into our product that customers can interface with best of breed user experiences, get better lending and financing through an embedded lending program. That's not our business. It doesn't make a material amount, but it allows me to transition us from knowledge to productized knowledge to automated software that improves the user experience, can lower costs for them. And I just took us on a bit of a tangent, but that's where I'm going.
That's a great tangent. The embedded finance conversation is one that I've wanted to have for a while, and maybe that would require a little bit more of a focus on it, because I think it is a huge area. Obviously unrelated to FinPub and things, but specifically in relation to it, I think there is a lot of things that are coming and that are out there, that again, like, change user experience, change product mix, change all kinds of things. And it's a really cool area. I haven't really done a conversation on it because, there's not a lot of people who seem to be very interested in it in the community right now. And so I haven't, but like, it's really exciting to me to hear you talking about it, because I think it's huge. I think it's a massive area of
Yeah.
opportunity.
So many areas in it to map out. Some like, quick aside. So Michael Milken was famous. Other than being a junk bond king, for this critical thinking time, right? Or he'd be like 4 or 5 in the morning, just sit there and think about complex problems, and before doing any meetings or any other kind of daily work, and just sit there and think about it. And so I sit there and think every now and then about what are all the different ways that there could be embedded finance. Like what is there in the finance world already? Like, just in terms of traditional stuff, there's insurance and estate planning. And so I write down each of those and go, I put the word embedded next to that and go, what would that be? And if it doesn't exist, first, I'll just go lazy. I'll go Google embedded insurance. A few years ago, there was nothing, no Google search results for that. Last year, Googled it, came across and met a woman who's founded this embedded insurance company. And it's incredible. I love what she's up to. And so I'll continue to do that over time and evaluate all of these different areas, because that's only going to continue to grow. It doesn't mean that it's a no-brainer, because they can face really high customer acquisition costs. It can be complex to integrate. Man, if you've spent any time with, I'm going to oversimplify for a moment, but if you spent any time with some of the, with Claude, GPT, any of these things, we're really quickly getting to this point where if you can think it, you can build a prototype of it. And if you can build a prototype, you can actually turn it into some piece of code. And maybe you don't become a full stack engineer just because you're a marketer and a product person and can come up with good ideas. You could get a lot farther than you could have just a few months ago, and doing these crazy things, thinking things up. And is it Matt Paulson was mentioning recently how hard it was that someone on Twitter commented, I love the heat map of all the stocks that you have on MarketBeat. And he's like, thanks, that was a beast to build. And last week, I just came across an open source version that uses generative AI with along and employs the TradingView API, and just builds it like that. Like, you don't even have to code that stuff yourself anymore. So what does that mean and that was created by a kid who's currently in college. And so it's like, what does that mean when these things get easier? It means to be competitive doesn't just mean we need to be able to capture more attention by being awesome on social media with short form video or anything. It's like, what are the table stakes for building products that people want to use go up. And I'm not saying that we're there where you can't build a FinPub or a Wealth Factory without it, because we're not a software company. So we're not there yet. But I think that even just thinking about that embedded finance, the oversimplified version was if you can drop an iframe into your membership site, that's step one. But if you could just even envision doing that, wow, there's a widget there for your clients in your verticalized business where you work with a bunch of, let's say, dentists, because I know a lot of people at FinPub will have that. And hey, for dentists, here is you don't have to get on the phone. We already have some information about you. Click a couple buttons, no credit checks, and we're going to be able to show you some really compelling finance offer, like funding offers for your business. That's like a step 2 beyond the iframe embed, but you can do that with very little technical knowledge now. So where are the opportunities in things like that can create personalization without the kinds of risk that we have as publishers when we get to personalization? Because I don't want to step on that, right? Like, but if you can embed another service that is doing, you can do content recommendations, but ultimately a licensed professional, it has to be a different company in order to button that up. But I think that embedded finance is going to really help bridge that.
Yeah, and even things like insurance, like the money in insurance is very big, right? Even like old school direct response, like kind of direct mail, telesales, infomercial people have like those guys would sell leads to insurance companies, right? Because they would pay out so well, especially on things like term life and things like that. And so there's a ton of money there. And so the idea of wealth building in FinPub is very narrow, which is great from a marketing standpoint, right? There's a lot of reasons for that. But that customer, again, is in his whole wealth kind of journey, has a lot of other things that he's thinking about and talking about and spending money with that a well-constructed franchise could capitalize on. And the embedded finance area is one that really just kind of takes it to another level. And then I think that like kind of to your point of the ease of these tools out there, like the ability to do anything in finance is so much easier than it ever was. I mean, you look at like Carta and things like that to raise special purpose SPVs, to do things like that, and like do direct investment models, direct to investor models. Like there's this explosion happening of alternate models because the tech stuff is no longer a barrier for people, right? It's not a barrier.
Yeah, big time. And I think that FinPubs are sitting on a gold mine here. They probably already know it. So sorry if we think about, I remember a couple of years ago, some college friends of mine from like 20 years ago, created a little stock picking club just to meet on Zoom during the pandemic and talk about, our ideas, what we see emerging, what might be a good whatever. And I remember I spent some time at the time, it wouldn't be a trade now, but looking at Square Cash. And there was a really interesting dynamic that they had at the time where their customer acquisition cost for their kind of little banking app was like, I'm going to butcher the numbers here because this is off memory, was like $50. But you compare that to the customer acquisition cost for a traditional bank that was offering a similar service, and that was hundreds of dollars. It's the arbitrage there. If you think about a financial publisher, they have way lower customer acquisition cost than the guys who are directly trying to sell insurance, trying to sell banking products, trying to sell wealth management, who are like, let's go out golfing and I'm also going to take you to dinner. And obviously that works. Don't stop the things that are working. But if you can acquire a customer for 50 and build a relationship, or acquire them for 100 or even 200, you still have an edge, and the FinPubs have scale. And that's one thing that I only have a 400,000 person database, and, had maybe like 100,000 people buy stuff from us, but like over the 10 years. But but the FinPubs that were in our group here that have the scale to be able to launch an embedded finance product, that because of the scale, the distribution that they have, they could win right out the gate from rolling something like that. And I think that's incredible to have. They have that arbitrage opportunity right there. And in insurance, here's a quick little story on that. One of our books that we market used to be called What Would the Rockefellers Do, until the Rockefeller Family Foundation said, stop using our name. So now it's called What Would Billionaires Do? And it's an awesome book. One of the strategies in there where it looks at how John D. Rockefeller created this like multi-generational wealth structure using trusts and using vehicles that you can emulate with overfunded whole life insurance, right? Where you get the tax benefits upon of transferring the wealth. You could borrow against the cash value to invest in entrepreneurial pursuits and pay that back at whatever rates whatever pace you want. People that read that book love it to such an extent that it has gone on to generate so much life insurance business for a life insurance shop that we refer, because people would read the book and go, who do I go to? And we're like, you can go to, it depends. You have to structure it the right way, but any reputable insurance provider, but you don't want to work with agents who are going to try to sell you whatever, let's say variable universal, because people get crushed by that or anything like that. Obviously, it's not like someone might be watching this and go, I don't like overfunded whole life. That's okay. My illustration is it ended up generating so much business for the people that want, because of the people that wanted to implement that structure and the people we referred to, that the two agents that we referred people to ended up becoming two of the top 10 producers at Mass Mutual in the country, and the CEO had their cell phone. It was like, that is not even our business. And bummer, that should have been my business, I guess. But maybe I would have not thought about it the right way. That had been my business. I'd be like, would I be trying to just like market life insurance and then be in the same boat as everybody else who's marketing it? Or my customer acquisition cost was $20, and everything that happened on referral on the back end, if that was part of my business, would have been, I could have factored that into the financial model, but you could call that icing on the cake. If I'm still getting, at the time I was getting 100% return on ad spend day zero, or 90% return on ad spend day zero, and still had our own programs to sell. And that's where back end can be really interesting.
Yeah. And that's what, I don't know. I feel like there was a period of time when people were a little bit more interested in kind of some of this stuff, and the FinPub kind of not quite collapse, but that real massive pullback has really sucked the air out of the room on anything other than like, hey, we need to get back to whole, which makes total sense, and that's not a criticism whatsoever. That's just the reality of it.
For sure.
And like people are less experimental right now than maybe they were, obviously when everything was flying high.
And it makes sense. We have to be prioritizing profitability. We have to be a little more risk averse in certain ways right now than when interest rates were zero and consumers were feeling really great and going, I'm going to do this thing. Like they were doing that every day. And now it's the demand certainly has dropped off. It's not where we were a couple of years ago from that perspective. So I'm sure we all have our hands full with what's the thing that's going to work now in this environment, right? Because we can't wish our way into a different situation with macro. We can't control that.
Right. But I do think that the issue of tools and the ease of tech development around tools, everybody that I know who has a tool, trading tool, whatever, that has become a bigger and bigger part of their business. I think there is a lot more demand and just acceptance and the need for or interest in investing in trading tools, right, as a product or service. And so I think ignoring that piece is a mistake for most people, because there is, again, like it's so easy to build screeners and scanners anymore. It's not the same, expensive development that it used to be. Now they may not all be up to snuff the way that a fully developed one is, but there's so much interest there that a lot of the groups that I know that have them are like, this is our fastest growing part of our business. I think that's going to continue.
Yeah. I think it's interesting. It gets me thinking though, like how do you think about R&D in the FinPub space? Like how should a FinPub, what are the best practices for how a FinPub thinks about like where to allocate towards experimental stuff? And I don't mean A/B testing necessarily copy or funnels, but let's say product. Sometimes we see private equity buy businesses and they go for profitability and get rid of the R&D side that was like the founder was dumping a bunch back into
Right.
building better experiences or building new innovative stuff, and then the business collapses, right? So like, obviously it doesn't always work just to turn it off. Where's the space for it? And how do you think in FinPub
Mhm.
about allocating in different economic cycles towards, I don't want to call it tinkering, I don't even want to call it experimenting, but trying to figure out the next thing separate from the messaging and campaign side?
Right. So there's a dynamic here in FinPub, and maybe some people are going to get upset with me when I say this. But I had a really good conversation with Andrew Taylor about over coffee about kind of all of the problems that hit the industry pre, up through, the FTC issues, the Gore Financial getting banned on Facebook and Google, um, all the different stuff, the stuff even with like the case against what's his face, who was taking money under the table to feature stocks, like all of these issues. If you group them all together, the Visa, MasterCard audits, like just like all the stuff from across all the companies, what you essentially have is a management failure, right? There were things that were not being looked at, that were not being managed. It's a management failure. And that's a symptom of the culture that is kind of your strength is your weakness. We have this very marketing forward culture about that is very much about like customer acquisition, copy, promotion. And that's a huge strength in the industry. And there is the standard pattern for somebody running a publishing unit is that they were a great marketer who really drove a lot of things and made things happen. And then you put them in charge of things, give them no management training whatsoever, none, pretty much. And now they're running a large, and in some cases, a business that grows into the hundreds of millions. And now things start to happen. And they're still doing what they're great at, but things start to happen. And so that even the idea of like, well, how do you allocate towards R&D is a management question. And what I would bet is that by and large, the thought isn't crossing most people's minds, right? Because we're not a very sophisticated industry from a management perspective. And that's good and bad. But it's also an area of opportunity, I think, for some people once you get to a certain size to really like think about like, well, how do we manage this business better? How do we really think about that? Take your view of like, well, how do we look at our cash flow? How do we look at all the things that impact this, and how do we think about R&D? Because the only people who are thinking about R&D that I come across generally, with a few minor exceptions, I would say Tradesmith has, their tool-based software business. You'll think about Matt Paulson at MarketBeat. He's very focused on development, right? But by and large, the only people who are thinking about it are the marketers and copywriters, specifically in the realm of what can I sell in an offer, right? It's offer development. And so otherwise, it's very much an area that, from my perspective, is undiscussed, right?
Yeah. So that's interesting because so a couple of thoughts. I remember a principle that my very basic foundational one that when I was in my 20s, mentor taught me. He's like, solve problems. You will get paid. If you solve problems, you're delivering value. And that's how you're going to build your wealth. So
Mm-hmm.
find out what they want, go out and get it, give it to them. That's like a simple mantra that a guy, Keith Cunningham, who was like
Mm-hmm.
rich dad of Robert Kiyosaki, right? What he said, find out what they want, go out and get it and give it to them. So we do think about that as marketers, right? We think about the solve a problem. Are there other ways to solve problems or are there other problems that we can solve that can be done through unique experiences? I'm looking at this, saw this tweet this morning from a guy, Greg Eisenberg, great marketer. I really like a lot of his content. He said, when I first moved to Silicon Valley, engineers were gods. A 10x engineer could make or break a startup. And now things have changed. I studied computer science at school, so it pains me to say this, but marketers are the new engineers, and attention is the new currency. So I think based on these tools that are coming out, not that this will happen overnight,
Mm-hmm.
but I think there are going to be some incredible innovations coming out of the marketers in FinPub, because, okay, marketers are the new engineers. Here's more from Greg. Like the attributes of a marketer: the ability to spread ideas, master the art of copywriting, speak visually, create engaging narratives, understand product psychology, build brand and community, engineer distribution. That's what the FinPubs have, and build dynamic funnels. So now, if you can take a component of your funnel or of your product and literally go to Claude and say, turn this into an interactive, turn this piece of my product, like content, into an interactive widget, that's like a very, it will do that instantaneously. You give it to your web person and now you have it. I mean, I'm oversimplifying, but like that can happen. So just to prove how not much I'm oversimplifying, I saw someone last night share on Twitter a cool couple slides from BlackRock of what they saw in a couple of market dynamics in Europe. I didn't particularly care about the content, but I went to Claude, take these 2 slides. I just dropped the screenshots in there, create an interactive dashboard from the charts and stuff that are in these slides, and then create an analysis for me as to what's happening. And it created instantaneously, it created an interactive dashboard that presented it way better than the slides did, with charts and graphs and menu items and all kinds of stuff that were interactive. You can hover over it and you can see. And then down below was an analysis that wasn't captured in the initial slides, because it's able to derive that by looking at the charts, just like so, just like someone who knows what they're doing might be able to. Now, you don't want to take that as factual that it didn't make an error, but generally, if you're a marketer and you could take a screenshot of a chart and you can drop it in and create an interactive dashboard of that data immediately, that takes 1 minute. And if you don't have time in your life to play for 1 minute a day, even just to get the ideas turning, because someone's probably not going to like buy because you put an interactive chart on your sales letter. But can we build that muscle for, as marketers, we build that muscle for, how do we show what we're trying to sell? How do we prove it? How do we show? So this is just another way of showing it, right? So we have the muscle for how do we show and convey these ideas and demonstrate. We now have even more ways to demonstrate at our fingertips. I don't know which methods of demonstration are going to be the highest converting, but you could start to create uniqueness in your business, differentiation, if you replace a piece of content or something static in your product with something interactive. Your conversion doesn't get made or broken by putting that in your product, but allows you to experiment with that and at least provide possibly a different or a better user experience. You get the feedback from your customers, and if they like it and go, wow, then maybe you can look at, how could I turn that into a marketing tool, or how could I get that wow on the other end? And that's how I try to think about that. Lower risk to put a better productized experience into our products that people have already bought, get the feedback. And if people like it, is there a hook there that would resonate with people that haven't bought yet? And can I use that for engagement or to get them to opt in or anything like that?
No, that's awesome. I think you're right. I think that's a path of development here for marketers.
I think about your, we've talked about before. I love when we're at the conference and you have your kids are learning entrepreneurship by helping with everything there. And I'm sure they're doing more with you too. And I love that. And as my 6-year-old's getting into, Dad, how do I make money? I want to make money so I can buy more Legos. We look at, how do we make it fun? And I think about, on marketing to adults, the answer is not just like make it entertaining and go viral on TikTok. Like that doesn't necessarily, as we've discussed in our groups here, that doesn't necessarily translate cleanly to buyer intent. But if you can make the experience delightful, then they're more likely to retain the information. So I think about that with my kid when I'm teaching him about money and entrepreneurship. So there's this like AI tool, Suno, right? Where you could literally just think an idea for a song, or you could write the lyrics, or any combination of, and within 5 seconds, you have a song. So I went, okay, summer project, because we were having a lot of fun with this. He said, my band name is Muffins in a Hot Tub. I was like, what's that? He said, I just made it up. Great. You know what? I was like, that would be I wrote the whole song in my head within a few seconds, just because I like doing that. I've always
Yeah.
liked doing that stuff. But it was like going to be style of like Ramones, muffins. Anyway, so I've got like a punk song. Go to Suno, drop it in. We've
Hmm.
got a banger here. And I went, okay, here's what we're going to do this summer. If you have other songs you want to create for your friends, things that you're doing, we're going to publish them on Spotify through CD Baby, $10 to do. Like, so now his song, he's got an album cover, his songs on
Oh,
Spotify.
that's awesome.
Yeah, you could go find it in your
Oh,
local
that's
Spotify.
awesome.
But I was like, here's how we'll make that fun. It's hard to make money as an artist. It
Hmm.
doesn't mean you're going to make money on this. In fact, it may be a good experience to learn that you can have fun and create something that's delightful, but it's really hard to make money. But like,
Yeah.
let's just see. Let's publish it and let's make some swag, print on demand shirts. And maybe a couple of your friends want them, and maybe you make $5. And if you do, that's the first $5 that you've ever made in an entrepreneurial pursuit. And maybe that's not enough to be a business. Maybe you learned it's really hard
Hmm.
to sell. Maybe you learned it's really hard to make something work, but you got that, you started to build that muscle and you can go back on that. So as we're experimenting as busy
Hmm.
business owners and as busy marketers, and we're going to live and die by, can we figure out the next promo, the next product that resonates? There is some low drag experimental stuff that we can do with some of these
Yeah.
tools that are really compressing the time from idea to prototype. And I'm
Yeah.
excited about that. And that's why I think with distribution that FinPub has, the ability to acquire a customer. So the customer acquisition costs arbitrage for
Hmm.
banking products and other products that have higher stick or higher lifetime value or are significantly more competitive. And all of the marketers who can think about how to connect with people, and you can think a mini product solution into existence, or at least a prototype of it, a
Yeah.
working prototype. I am extraordinarily bullish on seeing like what innovation comes out of this, because it's going to,
Yeah.
and we're going to see it in like now.
Yeah. No, I agree with you. I think that's the thing. And like the more people who are thinking about it and playing with it, the more stuff is going to come up for sure. I love that the music. I've seen that in like that's a cool way to do it. I love the idea. Like with my kids, I do the after the event, like I force them to do P&Ls and like everything else, and like then of course it starts the most annoying part, which is um they try and renegotiate their fee for like
Oh yeah.
yeah, but that's good
And
because I'm like, okay, let's talk about this negotiation tactic here.
yeah, come on, kids, never split the difference. Let's make this a
That's right.
win-win, right?
Yeah,
Yeah.
yeah,
My kid is becoming a fierce negotiator.
yeah.
But they're engaged, they're thinking about it. It's amazing. And it's like
Hmm.
they're not viewing it as work as much as enjoying solving the problem, right?
Yeah,
And my kid's only sub 7 years old, but like, so I created this GPT called Dream Factory, and it was, he can speak anything into the app and it'll create a bedtime story for him. And, but the twist on this one was that every story teaches a lesson in entrepreneurship or investing. So you may go, is that obnoxious? But like, it's still the story he wants to hear. It's just that the
right.
octopus or whatever has to solve a problem by collaborating with the clownfish, and in order to blah blah solve the problem, in order for them to like have a undersea lemonade stand or something. And it's like
Oh,
it gets those reps in. And as adults, how do we get our reps in that like mimic play but have business use case? And that's how I like to think about how to fit in R&D when we still have to turn a profit
yeah,
every day and keep the lights on.
yeah. That's very cool. That's a great point. That's a great point. Awesome. Well, I appreciate you doing this, man. This is a great conversation. I really appreciate you coming to FMS and being a part of the FMS Pro community too. It's you're a cool addition into the ecosystem here, and um, yeah, I'd love to. I can't wait to hear more about what what you guys are doing next, and what else. And if anyone wants to connect with Matt, I'm happy to make connections. You can find him on LinkedIn. You can find him at Wealth Factory. You can find him in FMS Pro. Um, so yeah, thanks, man.
Thanks, John. Love the FMS community. Excited to continue being a part of it, and grateful for what you're doing. And you're touching so many lives and helping people like me connect with other people and the thoughts. I mean, you have such a wealth of knowledge about it, and it's
Thank you.
opening a lot of doors to how I think about the world and how I can deliver value to my customers now and next year and the year after and the year after. So thank you for everything that you do.
Appreciate that. Thanks, man.
Yeah.
All right. Take care.
Bye.